Dan, you have become highly synonymous with the AI revolution and the Nvidia story. Of all the people I could think of who have been bullish on Nvidia, you have probably been bullish the longest, and the magnitude of your bullishness has probably been the closest to really capture what the opportunity has been and will be with this stock, and just as a general investing theme. Nothing I heard on the Nvidia call Wednesday night changes any of that, and I don't think it's changing any of that for you either. But if you want to just start off, give me the broad strokes on what we heard, and then we can get into some of the individual takeaways. And thanks for those words from you. It makes it fun. Look, as you and I have talked about a lot, it's all about putting the data points together. After you come out of the call, I'd actually say I'm incrementally more bullish, not even just on Nvidia, but on the overall AI wave. Because of the Blackwell delay, if there was going to be one headwind or black cloud, they put that to rest in terms of yields and any issues there. Demand has supply tapped anywhere from 10 to 15 to 1, right? So when I look at the underlying enterprise demand, not just in big tech, but even, when you look at sovereigns and what I think ultimately will be the rest of sort of enterprise, this is a story I still view as the bottom of the first, top of the second inning. I continue to view it as LeBron in high school. Interviewer: so you really do still believe it's that early? Dan: yes, we're only 3%, maybe 5% tops, of enterprises globally have even gone down this path, right? So it comes down to, sometimes I think it's very easy to not see the forest for the trees, in terms of okay, the October quarter, 32.5 billion whispers 33 billion. But now, the focus is more on this as a company ultimately going toward 50, 75 billion, eventually 100 billion per quarter. Yeah, and I think that to me is really the trend, not just for Nvidia, but for what it just means for the rest of the AI tech space. Interviewer: so I want to quote you. This was the opening paragraph of your post-earnings research note. Nvidia's earnings last night were front and center globally, as the godfather of AI, Jensen, or the torchbearer of this AI revolution. The tech stalwart delivered massive, drop the mic numbers yet again that easily beat the street with a top line that grew 122% from a year ago quarter, with 30 billion of revenue and a robust outlook for the October quarter of 32.5 billion, 80% growth. While some buy-side whisper expectations were a tad higher for the October quarter, we believe Nvidia's surging AI chip demand, Blackwell delay concerns laid to rest, robust outlook, and a meteoric enterprise pipeline speak to this AI revolution just starting to kick off its next phase of growth. I think a lot of people had that reaction, but the stock price didn't. What do you think is the main reason for why we saw Nvidia sell off almost 6 or 7% in the immediate aftermath of that report? Dan: I just think it's like people expect Jensen to win 60-0, 60-60. If it's 63, they see it as a loss by 3. So the point is you're expecting, okay, could they give a 34 billion number, just another? It was basically what I view as, call it, $500 million higher than sort of the base, maybe a little below whisper. I think it ends up probably being close to a 34 billion number, because I think now Nvidia recognizes when you're in this parabolic parabola, especially with Blackwell, there's no reason for them to give a 34 billion estimate, even though I think that's ultimately where it's going. Interviewer: so you think we've gotten spoiled, and it's still an incredible growth story, but maybe the expectations were fully baked in, at least for this particular quarter, not for the long term. Dan: and I think what's now going to start to happen, Josh, at this point in the next month, and with Nvidia next week, anyone that's doing supply chain checks, it's actually increasing in terms of demand over supply. All of a sudden, what starts to happen is the next drum roll starts. Hold on a second, 32.5 is probably a sandbag number. All of a sudden, the stock starts to, what I believe will continue to creep back up, and I believe we're looking at a 4 trillion market cap for Nvidia in the next 6 months. I just don't see what's stopping it given all the demand we're seeing from hyperscalers, from enterprise. The use cases now are exploding. That's why people dismissed Palantir. But look at them, look at ServiceNow, look at what we're seeing with Oracle. That to me is the next phase, the use cases, and Jensen hit on that a bit. Interviewer: I want to talk about demand. You said, there will come a time when competition from AMD and others ramps up, but essentially $1 trillion of AI capex over the next few years is coming its way. And last night's conference call further confirmed this demand outlook. The stage is set for tech stocks to move higher into year-end and 2025, in our opinion, as the Fed and Powell kick off their rate-cutting cycle. Macro soft landing remains the path, and tech spending on AI remains a generational spending cycle just starting to hit the shores of the tech sector. We continue to estimate for every $1 spent on an Nvidia GPU chip, there is an $8 to $10 multiplier across the tech sector, which speaks to our firmly bullish view of tech stocks over the next year. So you are very constructive on tech going into year-end and heading into 2025. And that multiplier effect, because of the GPU spend, means a lot of opportunity for a lot of stocks, not just Nvidia. Dan, that's exactly right. See, that's exactly what we really want. And what we talk to boards about is the multiplier. Because everyone thinks, oh, it's Nvidia, it's Microsoft. No, this now kicks off a cycle we basically have never seen before. And anytime someone puts the Cisco comparison to Nvidia, show the chart. It looks. I covered tech back then. Cisco, 90% of their customers were essentially leveraged startups and others in that sector. Who's the customer base of Nvidia? It's companies with $1.2 trillion on the balance sheet, government. So my whole point is that I get the comparison, looks great in a chart, appealing. But you cannot compare what we see here. It's the entire fourth industrial revolution that's being built out. And I think now it's the next phase. It's the software, it's infrastructure, it's other parts of semiconductors, it's names like AMD, it's names in cybersecurity. How are you going to protect the workloads? So that to me is really where I see everything. That's why I'm so excited about second, third, fourth derivatives. Interviewer, you've made this point, and so has WAM, about sovereign AI and every country, for security and for cultural reasons. Having its own AI that's almost like purpose-built for the nation in which the people are going to use it. Is that opportunity being underestimated currently when you look at the valuation of AMD, Nvidia, Dell, HPE? Do people not fully appreciate the extent to which AI is like a must-have as opposed to a nice-to-have? Dan, yeah, and I think that's a great question. I think actually the biggest thing that's not being priced in is the incremental tech capex spend. The tech capex from the stars is priced in. What's not being priced in is the incremental spend I think you're going to see from governments. I mean, if I look at typical government and enterprise budgets, think government, 8 to 10%, sometimes 12% overall spend. That's not in numbers yet. So as this all plays out, any company, any government, it all starts with that red phone. There's only one place where you're getting the chip. It's the new gold, it's the new oil. So here's the big question. How much Nvidia stock do you need to become a millionaire by 2027? The answer might shock you. If you already have over $100,000 invested in Nvidia right now, you're well on your way. Let me know if you'd like further adjustments.